Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the very first time, a huge welcome to our community. We have a massive episode to get through today, as always. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. As always, I'm very excited.
Yes.
Look, it's a big episode today. We're going to be covering the news that is moving markets. Pimp My Portfolio is back. Luke Laretive, the ever controversial Luke Laretive, is back to look at the portfolio of a member of the Equity Mates community. And then we're going to be answering a question on a new ETF that has hit the market. It's from Global X, and it's all about Chinese tech and innovation.
Yeah.
The ticker is DRGN. Dragon. So we're going to look under the hood of that. But Bryce, before we get into the episode, we wanted to just pause for a second because last week was a big week for us. And so for people who didn't see the announcement last week, we just wanted to, reiterate it here, which is that last week we agreed to sell Equity Mates to Beta Shares. Now, the deal isn't done yet. It's pending all regulatory approval, but it's a big milestone for us.
Huge milestone. We're very proud and very, humbled by the fact that the audience, you guys, have put us in a position to be able to do this, and we're really looking forward to the next phase of Equity Mates, which is going to be bigger, which is going to be better, which is going to allow us to speak to more Australians and help improve their financial literacy. So we released an episode last Friday with all of the details. There's a link in the show notes to a blog post on our website as well. So go and have a listen to that.
Yeah, I think the important thing to stress is that nothing is going to change. Like, we're not leaving Equity Mates. Part of the attraction of this deal was that Beta Shares committed to investing in the business, and it will allow us to do more than we could do ourselves. The team's going to be bigger. We're going to be producing more content, and hopefully we're going to be engaging more and more Australians on the possibilities of investing. So I think that's all that we need to say right now. Nothing is changing. We're going to be doing more. You're not rid of us. You're going to be sick of us.
Oh, we're going to be podcasting for the next decade.
But business as usual, Bryce, because the markets keep moving.
Markets don't stop.
So let's get into the news of the day.
News and markets.
Headlines we're going to be covering this morning. Crunch time for trade deals. Big tech are assembling their teams, and who had a good day? Hopefully all of us have had a good day. Let's get stuck in, Ren. It is crunch time for trade deals. If just to remind everyone, we are now 2 days away from Trump's 90-day pause from Liberation Day in early April, where he was expected to have done 90 deals in 90 days.
Yeah, that's what he wanted to do. Yeah, 90 deals in 90 days. I mean, there's 196 countries in the world, and it feels like he tariffed most of them.
Yep. Absolutely.
He also tariffed things that weren't places that aren't countries, like the Penguin Islands,
the
McDonald
Penguin
Islands.
Yeah.
We've got We got a half trade deal with the UK.
Yeah, very soft.
Yeah. And we got
That's it.
we got a Trump golf course in Vietnam.
Yeah, in Vietnam. Our $1.5 billion approval. So I guess by April 9, he was expecting to be in a much better position. Reports out of the US is that negotiators are seeking scaled down deals to ensure that there are some announcements by the deadline.
Yeah, I mean, look, to be honest, between the time we record this and we release this, I wouldn't be surprised if we get a few announcements from friendly countries. But yeah, the reporting from the Financial Times was that American negotiators are now trying to land like a sort of phase 1 deals that they can announce, with the idea that their negotiations would continue beyond the 90 days.
And so here's my question. Has the market priced this in?
No one knows what's going to happen.
Yeah, it's just like it feels markets are at all-time highs, and it's going to be very interesting to see. Yeah, it's going to be very interesting to see. Anyway.
Look, all it is a reminder for me. I think we've said this across every platform that we make content on, but I'm going to keep saying it. It's a reminder why we don't try and time the market. It's a reminder why we stay invested and we dollar cost average, and when there's a dip, we buy more.
Yeah.
Because you just can't predict what is going to happen. This president is unpredictable, but even with previous administrations, you just never know. You would think economic uncertainty in America, political unrest, wars abroad, and then all this like economic questions, you would think the market would fall, but it's at all-time highs.
Nuts.
It's nuts.
It's nuts.
All right. Anyway, let's move on because there is some companies that have caught our eye. Big tech are assembling their team.
That's right, Ren. Well, Amazon have celebrated 1 million robots while Meta is building a team of millionaires.
Which would you rather?
What, to be a robot or a millionaire?
Oh, I actually meant which team would you rather?
Which team? Oh, very tough. Well, I mean, Meta has an incredibly accomplished team of AI builders.
Yeah, so let's start there, given it seems like you've chosen Meta.
Okay, well, Zuckerberg is on an absolute spending spree at the moment, creating what he calls a super intelligence division within Meta, focused on advanced uses of AI. It's led by Alexander Wang, the co-founder of Scale AI. We spoke about him a couple of weeks ago, which is a company that Meta has recently invested $14 billion into. But he's going out and spending millions and millions of dollars poaching top AI talent from around the world. We're seeing sign-on bonuses to the tune of $150 million.
Well, it was that high, 150?
Yeah, I saw it recently. It's now it's $150 million. Average salaries between $7 and $30 million bucks. It is ridiculous what they're spending.
So, Wired published I think Zuckerberg actually in his memo listed who was going, but I was reading in Wired who these people are, and obviously these names don't ring a bell, but like it's a very impressive team. So like some of the people in here, the co-creator of GPT 4.1 and GPT 4.0, who previously led the perception team at OpenAI, the co-creator of GPT-4's voice models, the co-creator of GPT-4's image generation models, the co-creator of ChatGPT. That person previously led the synthetic data team at OpenAI. There are people from Anthropic. There's people from Google's DeepMind. The person from DeepMind led the last two generations of Waymo's perception models. These are people who are at the top of organizations that are at the cutting edge of AI.
Wild.
And Meta, who, they've got their Llama model, their open source model, but like they are obviously going hard in this space.
So hard. My Google money is going to go into Meta, I think.
Are you going to buy Meta?
I think so, yeah. I think like they're positioning themselves pretty well.
Yeah. It's just so funny that 2 years ago, it was so down in the dumps and people were talking about, the metaverse is bunk, TikTok's eating their lunch on Instagram, Facebook's dying, there's nothing to celebrate. Yeah. So in the last 2 years, Meta's up 145%, and I think we can only really put that down to one thing.
Meta glasses?
Well, you know what just turned 2?
Yes.
Threads. So Meta's share price is up 145% since it launched Threads. Where's the lie? Where's the lie?
It's a good point. Can't deny that.
And to celebrate their 2-year anniversary, they're introducing DMs to Threads.
What?
It's going to be a 10-bagger for sure.
Anyway, that's, we'll keep an eye on Threads, that's for sure. Anyway, on the other side, we have Amazon celebrating a huge milestone. They've just introduced their 1 millionth robot into their warehouses. They have 300 warehouses across the globe, and recently the 1 millionth went into a warehouse in Japan.
Now, unsurprisingly, Amazon is also investing heavily in AI. They've got a number of software platforms that they're integrating with this fleet of robots. One that they've spoken about is Deep Fleet, which is like their robot traffic optimization software that uses generative AI. Apparently, it has reduced robot travel time by 10%.
Yeah.
I mean, Amazon's the company to watch in a potentially dystopian way. On one hand, you've got CEO Andy Jassy warning that jobs are about to get cut in a massive way. Number two, they've got this huge fleet of robots that they're optimizing in all these ways. I'm not saying that the robots are going to take over, but I'm saying if the robots take over, it'll be Amazon robots.
Yes. Yeah. What a world we live in at the moment. Absolutely crazy. Anyway, let's close out with Who's Had a Good Day, brought to you by Good Day Multivitamin. And Ren, when it comes to being healthy, sometimes it can feel overwhelming, and that's where Good Day Multivitamin comes in.
Yeah, 1 sachet a day mixed with water, and you get over 60 health benefits, from energy to mental clarity, liver support, even helping with anxiety. We've been using it here, and it's been great.
Yeah.
Energy levels through the roof.
Through the roof. It is the least that you can do when it comes to getting on top of your health. Head to begoodhealth.com.au and use the code EquityMates for 10% off, or jump on a subscription and get 20% off. Good Day, making health simple.
Well, I think let's stay on the health thematic when we ask who had a good day, because hopefully we all had a good day with Microsoft's latest medical breakthrough. So they've just launched a terribly named product, MAIDXO.
Yeah.
All caps except for the X, which is lowercase.
Yes.
It's their AI-powered doctor. Okay, now here's the research that they released alongside of it. So they tested this AI-powered doctor on case studies in the New England Journal of Medicine. It correctly solved 85% of case studies. How does that compare to a human doctor? Well, according to Microsoft's internal research, that is more than 4 times the success rate of an experienced human physician.
Crazy. I'm loving it. I'm loving it because we're going to get to a point where you're going to be able to get a lot of small things diagnosed that would otherwise have to sit in a doctor's waiting room for.
Definitely.
Yeah.
Well, I mean, when we were chatting about this earlier, you wilting away from your hot take here, but your hot take earlier today was GPs won't exist.
Yep. and look, I understand the counter argument, which you were saying is that there's procedures and things that need to be physically done.
I also think there's such a human touch.
But people trust this stuff so much, it's crazy. You don't need I don't think that you need a human touch to tell you, I could be wrong, but like for very basic diagnostics, the implementation of injections and surgery and all of that stuff, of course, there's going to need to be a level of human, but even robots are getting pretty good at that now. But I think it's going to be great for medicine. Like, this is good news.
Well, I mean, it's going to be great for waiting lists and accessibility and cost. And yeah, there's a lot of things where technology makes more sense. I mean, like, you're already seeing emerging use cases of, like, melanoma detection, where it's like, take photos of yourself and let the AI analyze it rather than having a human do that. So I don't go as extreme as you. I think it will make doctors more efficient. Technology will be integrated in ways where it makes sense, diagnosis, identification. But I still think people want to speak to a human at the end of the day. People want...
This shit's going to be so human-like in 10 years. Seriously.
Okay, fine. It would be an Amazon robot.
Yeah, exactly.
But look, Microsoft has had a good day. That's an incredible result. And I think hopefully we all have a good day if our health system can get cheaper, more accessible, more efficient as a result of this new technology coming through. So until we have AI-powered doctors solving our every ailment, the least you can do for your health is take your Good Day multivitamin with over 60 health benefits. We're sure Microsoft's AI-powered doctor would approve. So head to begoodhealth.com.au and use the code EquityMates for 10% off.
Welcome back to Equity Mates. It is time for...
Hit my portfolio. Hit my portfolio.
That's right. This is a segment where we have a community member submit their portfolio to put under the microscope so one of our experts can review it and hopefully provide some ideas to improve it. Today in the studio we have Luke Laretive from Seneca. Luke, how are you?
Rice, Ran, good to be here.
As always, good to have you. And on the phone we have Michael. Michael, welcome to Equity Mates.
Hey boys, how's it going?
Very well. Thank you for submitting. Now, before we jump into it, can you give us a bit about yourself?
Yeah, so look, I've basically been investing for a couple of years now. And I guess, look, I started in sort of ETFs and all that sort of thing. Over time, I just wanted to get a bit more exposure to some individual stocks.
Yes, Michael, now we're talking.
So basically, yeah, look, I just sort of wanted to sell off a few of the ETFs that I had that I wasn't really getting much from, and then sort of dive into a bit of a bit more risk, but then some more concentrated returns. So
Love it.
That's how you make money, mate. That's how you make money.
Luke is licking his lips. So, Ren, do you want to take us through the portfolio?
Yeah. I'll jump in before Luke takes over. So, Michael's portfolio starts with 2 ETFs, his 2 biggest holdings, the iShares S&P 500 ETF and the Vanguard FTSE Asia ex-Japan ETF. Together, they're a scratch over 40% of the portfolio. Then we have 1 thematic ETF, the BetaShares Cybersecurity Hack ETF. And then we've got 10 individual stocks which make up 50% of the portfolio. So let's start in the US. Amazon, Mercado Libre, Meta, Netflix, Spotify, Uber, and Visa. And then coming home to Australia, we have Macquarie Group, Guzman y Gomez, and Cobram Estate Olives.
Awesome.
So, Luke,
awesome.
I can already see some of these names are like a red rag to a bull.
Cell Tech, GYG.
Yeah.
Do you have a nickname to start?
Okay, so it's the Fundy fanboy.
Fanboy.
Okay, let's start at the top. Like, if I was you and you're like, I'm not really willing to put 100% of my money in individual stocks that I pick, but I want active, like I want to be more active, more concentrated, not own 5,000 stocks, maybe own 50. Like, go and get a good active manager. Like, I keep saying it, but instead of an ETF, use an active manager. It's that simple.
Look, Michael,
right?
I think getting Shaw out of Luke for your ETF portfolio is a good start.
If you want to do the ETF thing, fine. I've got no qualms with it, right? All I'm saying is that for people who are like, listening to Michael talk, he's been like, I'm trying to get more concentration. I'm trying to, cool. All right. Well, there's a good way you can still do this core satellite thing you're all obsessed with. You can still do that without having to, in a way that's more aligned probably with what you're actually trying to do rather than just what everyone else is doing. So that's just my, a gut feel there. In terms of these stocks, like eyeballing those names, like they're all pretty much stocks I've owned at some stage in the past. So I would think they're pretty good businesses to hold long run. Macquarie's good. I think that actually looks pretty good at the moment. Pretty cheap. They've got, like, if you go back to their last result, they only really had the commodities trading business, and their sort of volatile global markets business as the thing that was holding them back. We think that's kind of swung and going to turn for them now. So, should be like all systems go there. At Macquarie, Guzman y Gomez I think it's expensive and it's not that good, and I don't have a problem with things being expensive if they're good, and this is not good, so therefore I have a problem with it being expensive. So that's fine. Yep. And then like Cobram, I get why you've bought it. Like, I understand, the appeal. I've heard some pretty average, so we do what I call channel checks, right? So we go and talk to people who work at companies. We go and talk to people who, supply companies, people who customers buy stuff off them, all those kind of things. And I've just had some pretty average feedback about Cobram. So I've heard some pretty average things about that business. So whilst it maybe hasn't come through in financials or share price performance or any of that kind of stuff yet, and there's a lot of people who still like it, I wouldn't buy it on the basis of it's got a bit of a stink to it in my when it comes to me, right? So from what I've heard now, that's not a scientific sample. I'm not spoken to everyone, but I've just got to it'd have to be real cheap, and I'd have to really, really, really want to own it to buy it, because I'm kind of like just a bit sus on it. So just a light.
It's got a bit of a stink.
Light asterisks on that. Penciled asterisks.
Just to try and bring a few actions here. If Michael wants to go with the roughly 45% of his portfolio at the moment is in ETFs, is it sort of a consolidate into a core VDHG or whatever, something similar? Because at the moment it's S&P 500 and then Asia ex-Japan, so missing a fair chunk of, I guess.
Yeah, probably go to an MSCI all-world type, ETF. If you want to tilt that more to Asia, you could just bolt on another, few percent in an Asian ETF or a whatever, like you've already kind of done. If you wanted to tilt that to like high beta kind of tech, you could keep the hack, or you can get rid of it, or, buy another one of those ETFs that they sell to you. So I just don't actually think, listening to you, that's kind of what you want to do.
Yeah, look, to be honest, I kind of do like having the more sort of direct exposure. So for example, with GYG and Cobram, that's sort of but there's a very low allocation there. So it's kind of more like, look, I'll just have that sitting there. Then if anything happens with it, then great. But if not, then like no harm kind of thing.
Michael, but you don't have percents to waste in a portfolio. So this is particularly when you run it the way that you're running this. Like from what I can see here, you've got no limit on the kind of stocks you can buy or the market. You haven't put an investable universe around yourself here. You'll go anywhere, do anything. So you need your very, 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 very best 30 ideas or 20 ideas or 10 ideas, whatever you're going to run. So you don't have space to have like the bottom of the portfolio. You need to be like everything you need in this thing you need to love. Like today, best thing you can own.
Yep.
You need to look Cobram Estate olives in the eye and figure out if you really love it.
Yeah, or Guzman Gomez. You need to look at the Val and Guzman and Gomez, and if you're a rational and normal human being, you'll realise there is only one logical thing to do with that stock. So
think about when you're picking stocks. Think, could I defend it with Luke? And if you couldn't stand up to Luke and say I believe in this stock, then I think that's probably a sign that your money's better spent elsewhere.
Like if you said to me, you genuinely think that Spotify is one of the best 30 businesses you can own on the planet, I'm going to have a hard time arguing with you. Like it is a ripper business, right? And it's inflecting profitability, elite management team, category killer, well worth the multiple. Actually not that expensive when you stack it up against some of the rubbish you pay for on the ASX. I get it. Visa? Maybe not. You know what I'm saying? Like that's kind of...
the payment rails for the digital economy?
Is it?
Yeah.
You very sure about that?
Well, every digital payment startup still uses Visa and MasterCard.
Yeah.
And that's why I bought it.
Yeah, and I think there's. I'm just asking the question, right? Like I'm like I said, you can own whatever you want. I don't, I don't really have a view on these things.
I think it's a trend we see a lot though, Luke, which is a lot of, and I've done the same. You sit these small dollar amount or small percentage amount. Thinking that, let's just see what happens.
It's a lotto ticket.
But to be fair, like Guzman Gomez, Michael, would have to double for it to be in dollar terms in line with some of your other positions there. And so like the reality of that happening.
Look, the portfolio construction here is a bit, on the dollar value, I don't like because it's kind of drifting towards personal advice. So I'm trying to avoid kind of talking about that.
Well, to be honest with the GYG thing, so it's more like I know it's expensive, but it was more like, look, just buy it for now, then wait until it does get a bit cheaper and then load up on it. So it's more just to have like a foot in the door, at least a little bit, so I can keep a better eye on it. If
it's not a buy, it's a sell. There's no hold, there's no accumulate, there's no there is a little bit there where it's like plus or minus 5%, and you're sort of in the in the realms of where you think it's worth. But there's some people that are talking to me online that writing comments on my stuff that comes out. They're like, I'd buy it on the dip. I'd buy it on the, and it's like, well, no, then it's a sell. And then you would buy it on the dip. And, if you think it's expensive, then you'd sell it now and you'd buy it back later when, it's cheap. And so I think this sort of fence sitting, it's bad because like brokers and financial advisors, they live by this stuff to try and get clients and convince them, to come and use their services because they never really say what they think. So, yeah, I would try and get yourself out of that mindset. Just think black and white. Is this cheap? Do I need to own it? Like, it's that simple.
Yeah. Nice. I don't think we're going to resolve the GYG debate this time around. Michael, I'll give you Luke's personal number after this, and you can give him a call and sort it out. But we have reached. I'm going to
post those nudes if you do that, bro.
We have reached the end of today's session. So, Michael, thank you so much for submitting. I hope out of all of that, there's been a few takeaways for you to put into action, or at least to think about. But we do really appreciate you taking the time and submitting today.
No worries. Thank you.
Good man, Michael.
Thanks, Michael.
Thanks, Michael.
Cheers, guys.
And if you would like to submit to Pimp My Portfolio, head to equitymates.com/contact. If you'd also like to speak to Luke or any of our other handpicked advisors, head to equitymates.com/advice. Fill out the form and we will connect you. But Luke, as always, it's been a pleasure.
My pleasure, Brycey.
We love getting your questions here at Equity Mates, and today's community question has come in from Oscar.
Hey lads, just have a quick question on the new global X ETF DRGN Dragon China Tech ETF that offers access to 20 leading Chinese technology companies listed in Hong Kong and mainland China. It's just come on the market. Just wanted your opinion on it. Thanks.
Well, thank you, Oscar. We love the question. If you have a question, head to equitymates.com/contact. You can write the question in or leave a voice note. Full disclosure, we definitely prioritize voice notes when preparing the content, so act accordingly. But Bryce, the new ETF, the Global X China Tech ETF, the ticker is ASX DRGN. We've had a look under the hood to get a sense of it.
Yeah.
What's your initial take?
Initial take is I actually don't mind it, but let's go through what it is all about, and then we can close out with why that is the case. So, as Oscar rightly pointed out, this ETF gives you access to 20 leading Chinese tech companies listed in Hong Kong and mainland China. It's designed to align with China's national innovation strategy, including initiatives like its Made in China 2025 initiative. That is a state-led plan to transform China's manufacturing sector into a high-tech superpower. So these companies are right in the middle of government-led initiative, which I think is important. It's a rules-based ETF, so it has a screen that screens out companies. To get into this ETF, some of the rules and methodology include market capitalization, trading liquidity, hurdles. They look at 1 year sales and earnings growth, and also free cash flow. So some, I guess, financial metrics there for all of these companies to pass to be eligible for the ETF. The ETF is pretty diversified. So as I said, it gives access to A shares listed on mainland China and H shares listed in Hong Kong, and gives a pretty comprehensive overview of the Chinese tech landscape. So Ren, let's look at some of the top 10 holdings here. Firstly, they have an 8% cap when it comes to each of the holdings, so they're not going to let the holdings blow out. That's going to be a bit confusing when we go through this, but it'll get rebalanced.
When they rebalance each quarter, no share could be more than 8%.
That's right. Yeah. So they'll let it run. So the top company is Xiaomi, 8.93% at the moment. This company sells smartphones, smart home devices, consumer electronics, and the like.
Hold on, have you, just to pause on this is a bit of a tangent, but have you seen what they did last week with their car?
No.
So a big thing in China, a reason they're dominating electric vehicles is China have basically told all electronics manufacturers, make cars. And so like a lot of the smartphone makers are now either making car parts or cars themselves, because it's like a key Chinese government priority to win the renewable energy fight. Makes some of the actions going on in America questionable, but that's a separate conversation. Xiaomi launched their first car, sold 200,000 cars in 3 minutes.
What?
In their pre-sale. They launched it and it just went nuts. Yeah. Years-long waiting list.
How good's this car?
I mean, I'll show you a photo if you want. It's not crazy, but it looks nice. There you go.
Wow. I honestly reckon, so I've never actually bought a car. My wife, Harriet, I have inherited hers. I reckon the first car...
Well, you don't have your license yet.
Not true. I reckon the first car I buy will be a Chinese model.
Really?
Yeah.
Did you see Ford's CEO, Jim Farley? He came out and he said the Chinese EVs are far superior to American EVs. And he said, quote, "It's the most humbled I've ever been in my life."
Wow. There you go.
Anyway, that's just the first holding in this.
That's just the first holding in the company. Yeah, the second holding is Luxshare Precision, so a manufacturer of electronic components. The third is East Money. These guys operate China's leading online financial data and brokerage platform. We've got Tencent in there, which runs China's biggest social network, online gaming, digital services empire. Nora Technologies, these guys produce semiconductor manufacturing equipment for China's chip industry. You've got JD.com, which is an e-commerce platform. You've got Alibaba, which is an online retail platform. BYD, which is the leading Chinese EV maker, and then Meituan, which is online food delivery, travel booking, local lifestyle bookings, and the like. So a real mix there of manufacturers, e-commerce, online platforms, you name it. That's the top 10 out of the 20 holdings.
Nice. So the fees are 0.45%. So that's kind of like right in the range of thematic ETFs.
Yeah.
I think most thematic ETFs you would see I reckon 0.4 to 0.6 is kind of what.
Yeah, about that.
Yeah. So yeah, it's competitive. I've got thoughts, but why don't we start with you? Because I think you quite like this.
Yeah, I think, to be honest, thank you, Oscar, for bringing it to my attention. I don't mind it. I like the access to both mainland and Hong Kong. I think it's, I like the diversity of it as well. And I'm kind of comparing it to the Crane Shares KWEB ETF.
Okay.
The ticker is KWEB, and it focuses on Chinese internet and e-commerce companies listed in the US and Hong Kong. So slightly higher management fee. You do miss out on some of the mainland companies.
It's funny you say that, because that was going to be my thought as well. So the natural comparator is this KWEB ETF, obviously listed in the US, but most brokerages these days you can access the US. Because when I first looked at DRGN, I thought there was just some really obvious oversights. So number one is Baidu, not in this ETF. And for people unfamiliar, Baidu is like the main search engine over in China, the Google of China, I guess you could call it. And you know, they always talk about the big three, the BAT, Baidu, Alibaba, Tencent.
Fair call. That might be because it's dual listed. It is listed in Hong Kong, but it's also listed on the NASDAQ.
Yeah.
So
it's
maybe it falls out of the maybe it falls out of the rules. But yes, Baidu, fair omission.
Yeah,
I mean fair call.
So that's one. Pinjoy Duo, PDD, which is the company behind Temu. Even if we don't love Temu, it's been a big winner. I assume it's probably, again, because of the US listing. And then another one because of the US listing is Tencent Music.
Is that separate? Oh, as in just Tencent?
Tencent
Is
Music.
that separated?
Yeah. Separate company. Yeah. So as I was like comparing the two, I was like, there's some big Chinese companies that are in Crane Shares but aren't in the Global X one. On the flip side, then you look at the Crane Shares holdings, and it doesn't have Xiaomi, the phone maker and EV maker that we just spent so long talking about.
No BYD.
Crane Shares doesn't have BYD,
No.
because it's mainland.
Yeah.
And so I get that ETFs love rules. ETF makers love rules, and I may be drifting into active management territory here. But just
do it all.
Just say, here is your top 30 Chinese companies, wherever they may list.
Yeah.
Because, you know, up until recently, Shein was going to list over in London, and all of a sudden it wouldn't be in any of these Chinese ETFs. Global China ETF.
Global Chinese tech and innovation.
Yeah. But look, I think to bring it back to Oscar's question and to bring it back to Global X's ETF, I think it's great that we're getting more access to Chinese tech. I think it's going to be more and more a theme of our lives as China tries to transition its economy to both a more consumer-driven economy. As wealth grows, you would expect those tech companies to do well in China, but then also as it tries to dominate sort of these new economy spaces, renewable energy, electric vehicles and the like. Some of these tech companies are obviously doing well on the back of that.
Yeah. Love it. Well, thank you so much, Oscar, for the question. As we said, head to equitymates.com/contact if you would like to ask a question. Leave us a voice note just like Oscar did, and we'll make sure we get it onto the show. But Ren, as always, great to chat stocks. Plenty of stuff happening. By the time this comes out, we will only be days away from July 9, when who knows what's going to be happening. So we'll be keeping a close eye, but we'll pick it up next episode.
Sounds good.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.